Breaking news. Japan's Nikkei 225 hit fresh record highs this September, levels not seen since the legendary bubble of 1989. But here's the twist. This time the drivers are completely different. Today we'll rank the 5 hottest themes that powered Japan's markets in September and reveal why investors piled into these trades and which may lead October. September was a whirlwind for Japan's markets. The Nikkei not only broke past 45,000, it outperformed global peers, rising nearly 7% this month. Foreign investors were major buyers, with net inflows exceeding 1 trillion yen, betting on Japan's resilience. The yen's slide past 150 boosted exporters but squeezed importers, adding volatility. At the same time, the Bank of Japan held off on further tightening, signaling stability for equities. And globally, while Wall Street paused, Japan stood out as one of the few major markets pushing to fresh records. Domestically, politics added fuel. Prime Minister Ishiba's resignation triggered a leadership race, creating both uncertainty and expectation of new stimulus. Against this backdrop, investors searched for clarity, and 5 themes emerged as clear winners. Driver: the global AI boom and massive demand for chips. Data: global semiconductor demand projected to top $1 trillion by 2030. In September, Lasertech surged over 15%, while Tokyo Electron and Advantest both posted double-digit gains. Reports noted, semiconductor-related stocks led the Nikkei higher. Takeaway: these aren't cyclical noise trades anymore. Semiconductors are the backbone of Japan's rally and the global AI supply chain. Driver: U.S. pressure and Japan's own pledge to raise defense spending. Data: Japan targeting 2% of GDP, or roughly 11 trillion yen annually in defense budgets. Mitsubishi Heavy surged nearly 40% year-on-year, while Kawasaki Heavy and IHI hit multi-year highs, order backlogs at record levels, ensuring years of revenue visibility. Takeaway: defense became one of September's hottest trades because it's politically safe. It wins votes, creates jobs, and delivers visible results, making it a structural growth story with guaranteed contracts. Driver: government roadmaps for commercial self-driving in the 2030s plus booming inbound tourism. Data: Sumitomo Metal Mining rose on strong demand for EV and battery materials. Happynet jumped as investors bet on auto tech momentum. Japan's Ministry of Land and Transport aims for widespread autonomous logistics and smart mobility infrastructure. Takeaway: investors saw echoes of Tesla and BYD. Japan's suppliers to batteries, sensors, and smart transport became one of the fastest-moving trades of September. Driver: global investors searching for yield as yen weakness amplified payouts. Data: Lixil offered approximately 3.8% yield, while Sumitomo Rubber exceeded 4%. Foreign inflows into Japan's high-dividend ETFs spiked in September. Dividend yield spreads versus U.S. Treasuries turned historically attractive. Takeaway: in uncertain times, investors don't just want growth, they want cash in hand. High dividends were the quiet giant of September's market inflows. Driver: stock splits and Japan's unique shareholder perk culture. Data: Ryohin Keikaku, Muji, Create Restaurants, and Aeon all drew buzz. Historically, stocks often rally 10-20% post-split. Aeon's popular shareholder card, restaurant vouchers, and retail perks fueled retail demand. Takeaway: in Japan, culture itself moves markets. Shareholder perks and splits aren't gimmicks, they're catalysts that bring retail investors in droves. So what's next? October brings pivotal catalysts. A new LDP leader and cabinet almost guaranteed. History shows new governments bring stimulus. The US Fed and global oil markets could swing sentiment. Domestically, preparations for Expo 2025 and inbound tourism beyond 30 million visitors will keep infrastructure and transport in focus. The question is, which of September's winners will sustain momentum? But investors must balance both risks and opportunities. On the risk side, the weak yen inflates import costs, squeezing manufacturers and retailers. Severe labor shortages loom, with 1/3 of skilled workers set to retire by 2030, especially painful for construction and heavy industry. Japan's fiscal limits are real, with debt already at 260% of GDP, And globally, uncertainties, from the US election cycle to China's slowdown, add volatility. Yet the opportunities are just as powerful. Structural semiconductor demand is not optional, it's the backbone of the AI age. Defense contracts are government-guaranteed, insulated from market swings. High-dividend stocks offer stable returns, attracting foreign investors seeking both yield and currency gains. And Japan's unique shareholder culture, stock splits and perks, continues to draw retail capital, a force unmatched in other markets. Yes, the risks are serious, but the structural tailwinds shaping Japan's market are equally undeniable. In September, Japan's market was defined by 5 powerful themes: semiconductors, defense, self-driving mobility, high dividends, and shareholder perks. Each drew investors for different reasons, but all shaped the Nikkei's historic rally. Which do you believe has the strongest future heading into Q4? Drop your pick in the comments, we'd love to hear your strategy. And don't forget to subscribe to Sakura Stock for more deep dives into Japan's market gems.